This 4x4 is driven by CASA's Climate Smart Agriculture Advisor, Jonny. Jonny's research has identified 8 technologies with potential for investors and climate impact. They are smart irrigation systems using sensors, digital information platforms, solar-powered drip irrigation, processing units and cold chain storage, biocontrols and precision applications, biological coatings to extend the life of food, and biodigesters. We asked Jonny 4 questions designed to inform investors about climate smart and nature positive agriculture. He had 4 minutes to answer each question. What are the opportunities for investors relating to climate smart and nature positive agriculture?
There are opportunities to invest in both adaptation and mitigation technologies in agriculture in both Asia and Africa, and that includes both digital technologies for information as well as on-farm technologies to improve production and post-harvest technologies to avoid losses and waste. There are 450 million smallholder farmers across Asia and Africa that are in need of these technologies to build resilience to climate change, to lower their carbon footprint of their production, and there are huge opportunities to invest in these technologies that are going to enable them to leapfrog, to improve production practices. There's a need to invest up to $300 billion per year in these technologies every year to adapt to the impacts of climate change and to build low carbon production systems, which are increasingly in demand by both governments and by consumers. There are risks to investing in agriculture with farmers that are at risk of the impacts of climate change as well as in the seasonal variations that exist. But there is a huge need and a huge opportunity for these technologies to help farmers leapfrog to more resilient and productive and low carbon systems of food production that investors can take hold of in the coming years. These are in areas such as drip irrigation and smart irrigation for improved water resource management. They're in areas such as cold storage technologies powered by renewable energy to avoid losses and waste and really maximise the profitability of the crops, as well as digital information systems helping farmers to know exactly what to do and when to avoid the damages of climate change. And each of those presents different types of revenue generation for investors. So many of those technologies have proven that they're able to generate viable incomes every single year, but not yet at the profit levels that are seen in other areas of technology or infrastructure investment. So many private investors would be looking for 20 to 30% growth year on year. Those technologies aren't yet able to deliver those kind of returns. But if we're able to start to address some of those constraints, particularly on the demand side, and the more that those costs scale, the more those companies are able to mature, the cost of those technologies is going to come down and those revenues are going to start to inch up towards those higher levels of return. We have a challenge at the moment that there is a pull from other areas of technology such as renewable energy technologies, solar mini grids or wind power, where investors looking for a climate smart portfolio are able to see a more mature market with more predictable growth. But the area of real scalable and transformative growth that is on the verge of really taking off right now is in climate smart agriculture technologies, when you have that base of 450 million smallholders across just Asia and Africa.
The CASA programme is proud to be building partnerships across the world to help to deliver climate finance solutions in Africa and Asia. Visit the events page, past events section, to hear other expert viewpoints shared in the CASA 4x4s and webinar series.